Hello everyone. Today we are going to discuss about an introduction to banking. So first of all, we should know that what is bank. So a bank is a financial institution that accepts deposit from the public and creates a demand deposit while simultaneously making a loan. So bank is a financial institution. Basically, it will be accepting a deposit from whom? From the people or from the public. And it creates a demand deposit while simultaneously it also lends back the loan to the people who are in a need of money. Now, when we say banking, so bank is a financial institution and banking is a process of doing that particular task is known as the banking. What does the banking do? It accepts and safeguard the money owned by the other individuals and the entity, lending out this money in order to earn a profit. And it widened and now various other services also offered by the bank. So it accepts the deposit, it safeguards the money which is been owned by the other individuals, as well as it lends out the money in order to earn the profit. How does it earn the profit? It earns the profit in the form of the interest, whatever has been accumulated through that particular amount. And it also not only accept the deposit and lend the money, it also provides many other services like providing a different kind of loan or providing different kind of facilities as an agent to the customers, as well as it also helps in giving a locker facility. So a lot of other services also are being provided by the bank. Now we're going to see what are the functions of bank. So basically, there are primary functions as well as we have secondary functions of a bank. So the first primary function of a bank is to accept the deposit, and second primary function of a bank is to grant the loans. Let's see one by one. So how does it accepts the deposits? It accepts the deposit in the form of a fixed deposit, which is very popularly known as FDs. I think many of you would have heard about the FDs. So what happens exactly in the FDs? So where the customer will be depositing the money for a specified period of time. So when you buy an FD, so there is a specific period of time which has been mentioned by a banker. And here the investment period may be either short or long term. Either it could be for a year or it could be for 3 years or 5 years. Longer you keep the money, longer the interest is being paid by the banker. So the tenuity of this fixed deposit is fixed by the banker, and you get the higher rate of interest through this fixed deposits. No withdrawal of money before the maturity. So banker doesn't allow the customers to withdraw the money before this whole tenuity of the fixed period is over. Only the withdrawal is allowed by the banker in case of the emergency. So a customer can avail the money only in case of any kind of emergency. The banker will allow the customer to break the FD and provide the money to the customer. So this is one way through which the banker will be accepting the deposit. Moving on to the second one, which is saving deposit. So this is a basic type of bank account. So most of the salaried people or even not salaried people, they can open the savings account where they will be depositing the money, where the money will be safe and they can withdraw the funds with some kind of limitation which has been imposed by the banker. And they also earn a certain amount of interest as well. They enjoy the maximum benefits by having this kind of savings deposit. So first one is a fixed deposit and the second one is the savings deposit. Moving on to the third one, which is current account. So this is usually been maintained by the individuals, businessmen or the corporates. Significantly higher number of transactions with the bank on a regular basis. So in that case, they encourage to open a current account. No interest is being paid from the bank. Why? Because there is a transaction every now and then. So no interest is being paid to the customer. It is only to keep the money safe. The most of the individuals or the businessman or the corporation, they will run this kind of operate through the current accounts. It needs a maintenance, maintain high minimum balance is needed for the current accounts. Non-maintenance of this minimum balance will attract the penalty towards this individual or the businessman. And single business, no multiple accounts. So if you have a business account, in that case, you can have only one current account. You cannot have the multiple current accounts. Moving on to the third one is recurring deposit. So this is a way of motivating people to invest more in the bank, where regular income people, they usually prefer to take this kind of recurring deposit. So here the interest will be paid on a cumulative basis. So you deposit a fixed amount of money every month. So minimum deposit is rupees 100 and maximum deposit, there is no limit for recurring deposit. Period of deposit minimum is 1 year and maximum is 10 years, and penalty charges for non-deposit of monthly amount. It also helps in earning the interest, and this interest differs based on the category, tenure, and senior citizens, they earn the higher rate of interest, and longer term will also attract the higher interest. Moving on to the second primary function of bank is granting the loan. So how does the bank grant the loan? The first one is through an overdraft. So an overdraft lets you borrow the money through your current account or savings account by taking out money more than you have in the account. Say if you have a balance of 50,000, but through this overdraft, the banker will allow the customer to withdraw more than 50,000. Probably the overdraft facility, what has been provided to the customer would be around 5,000. So he, instead of withdrawing 50,000, he can now withdraw up to 55,000. Then there is an overdraft limit, which will be decided by the banker. Withdrawal of money till the assigned limit only is possible over here. Here the charges interest higher than the cash credit. It is a short-term credit and limit based on the repayment history. So this overdraft facility has not been given to all the customers, whereas the overdraft facility has been provided only to the esteemed customers of the banker. Moving on to the second method of granting loans is the cash credit. So here the customer needs to open a separate bank account called cash credit account. Businessmen can claim, not individuals, granted to the customers to bridge a working capital gap. And here the customers have to provide some form of collateral as a security. So cash credits are tax deductible and cash credit is a short-term credit. So here the interest rate is lower while comparing to the overdraft. Moving on to the third way of granting a loan is a term loan. So term loan is a loan approved and disbursed by a bank. This is for a fixed amount of money that should be repaid in a regular payment. And this has been done through an equated monthly installment over a period of time. So term loans can be offered in both fixed and the floating rate of interest. Now, what's the tenuity of the term loan? It is from 1 year to 10 years. And tenure is decided at the time of the loan application, that how long the term loan will be given. Now, what are the examples for the term loan? We have home loan, education loan, car loan, personal loan. These all are the examples of the term loan. Moving on to the secondary functions of bank, we have agency functions and a utility function. Now, what kind of agency function has been provided by the banker? Bank itself make the monthly payment for your accounts. What are the kind of payments can be done by the banker? We have insurance premium, rent, salary, any kind of fees, and customer authorizes the bank. So here the bank customer has to give the instruction to the banker that he wants that the banker should do all this kind of an activities, and all the his rents and any kind of a dues or any kind of a monthly installment should be taken care by the banker. Based on the customer's instructions, the banker will be paying all his premium, rent, as well as different kind of dues, subscriptions, all will be taken care by the banker. Then buying and selling of shares. So here the banker will be buying and selling the shares on behalf of the customers, and it also undertakes the function of selling the securities, and clear writing instruction have to be given to the banker. Then collection of check. Here sometimes the banker also undertakes the collection of check deposited by its customer. Say for example, if we don't have a branch of SBI, in that case, the HDFC will be acting as a collecting banker, where the HDFC will be collecting the check from the customer on behalf of SBI, and then later it is being paid to the SBI. In that case, the HDFC is acting as a collecting banker. Then other functions, what has been done by the banker is transfer of funds. So this has been done in the form of checks, bank draft, as well as through an electronic mode of transfer. So we all understand what is checks. So documents that orders the bank to pay a specific sum of money. This is from one person's account and to the person to whom the check has been issued. It is very safe, secured, and a convenient payment of mode, and there is no fear of theft is there through the check payment. Then we have a draft, and which is very much known as DD or a bank draft. So instruments like check used to make payment. Likewise, check is issued by an individual. Bank draft or demand draft is issued by the bank. So bank draft is guaranteed by the issuing bank. On the customer's request, bank issues the bank draft after ensuring the customer has the sufficient payment in his account. The check is drawn by an individual, but bank draft is drawn by the bank. And demand draft or bank draft is secured form of payment for the payee. Utility functions. So we have a locker facility where depositing the gold, jewelry, important documents, and this has been hired by an individual or a company. It has 3 sizes, as well as there is a rental charges which is applicable to avail this facility. We have underwriting of shares, where the banker acts as an underwriter to many companies. Here, the bank underwrites the securities from the issuer, then turns around to sell the securities in the market. Underwriters can sell the securities with more price in the market than the price it purchased from the issuer, and underwriter charges the fees. So with this, I hope all of you have understood what are the functions of the bank, what is bank, and as well as what do you mean by the banking. Thank you very much.